It was just a few weeks ago that I mentioned the best of the sugar price was well behind us. It's amazing what a weather event will do to a commodity price, or maybe that should be a weather non-event. This is Mumbai in India last week. Holy men sitting in big water jugs praying for rain. For the second year running, the monsoon is either late, weak or just not happening. India is the world's largest consumer of sugar, and if it doesn't rain, they can't grow their own crops, so they're forced to buy on the international market. And earlier this year, the price of sugar rocketed to 30 cents a pound. Here's a graph of how it's moved around, all because of supply, demand, and of course the Indian weather. Note the trend up in recent weeks. That's all related to the Indian monsoon or non-monsoon. Last week, sugar closed on the International Commodities Exchange in New York above the 18-cent mark for the first time since March. The rise was a fraction under 2 cents for the week. The further out contracts have also lifted strongly. Elsewhere on the futures, soybeans were steady, but Chicago wheat and corn futures rallied sharply. This came about after some bullish reports on acreage planted and stocks on hold. Research provided by the Commonwealth Bank is urging caution on this price spike. And back to New York for a glance at cotton, where traders are citing the unstable outlook for global economic growth as the reason for cotton going soft in recent weeks. And here in Australia, futures trading at the ASX supported Chicago, and the weakening dollar also helped. January wheat lifted on both sides of the country. WA wheat was up a remarkable $11 for the week. And Pro Farmer newsletter has an interesting take on the grains market, suggesting there may now be light at the end of the tunnel in terms of an upward trend in prices. Now to livestock, where quality remains an issue in most markets, not so unusual for this time of year. Trade cattle continue to lift. Japox also went up, but cows remain off the boil and demand for feeder steers was soft. Lambs remain white hot, staying above $5 carcass weight. In fact, I spotted French cut lamb chops in a Brisbane butcher shop the other day, $46 a kilo. And mutton slipped a fraction, but above $4, it's still more than $1 a kilo above this time last year. And the rough trot continues for pig farmers. MLA reports supply of pork and bacon weight pigs continues to exceed demand. Now to dairy, and for the first time in months, prices came off a fraction last week. The Oceania price for both butter and skim milk powder fell marginally, probably in reaction to the general market instability. And it was an interesting week for wool brokers. Currency markets and the stock market instability made trading challenging, to say the least. When selling finished, the indicator was saved by our dipping dollar. The EMI closed at 898 cents a kilo, a fractional lift. And for a change, the fine wools did better in a market dominated, as usual, by China. Now, in closing, I'd like to pay a brief tribute to one of Australia's best-known meat processors. Leo Pugh retired last week after a lifetime in an industry where he had the respect of all. Leo started his own company at Kennan Hill in Brisbane way back in the 60s. And of course, like all processors, Leo says he's never made a dollar. He's just around to help the struggling cockies. Well done, Leo. That's the Landline check on prices.